Alright, ICT traders, welcome back to the channel. Just a very brief one. This morning I took a trade on GBP USD and so far the trade has given me up to 40 pips. I want to show you the reason why I took the trade, because it has been a while that I've taken any trade in the currency market, because the month of August is usually not a suitable month for trading. I have been trading synthetics, as you know. I've already told you guys in the Telegram community. So you're going to see this particular trade. I saw it this morning and it's like the market is beginning to gain momentum. There is going to be a lot of momentum coming back to the market very soon. So I took the trade using a simple mix of top-down analysis with London Killzone. So far, I've taken partials of this particular trade, and this trade will possibly continue to reach my TP. And my TP is around 100 pips. So far, I've taken up to 40 pips in this particular trade. So this is why I took the trade. I went to the 4-hour time frame. For a while, if you observed, GBP USD has been in a ranging market, and I decided to take advantage of that. Let me show you from the 4-hour time frame. This is my 4-hour time frame. Deleting everything I have right here. Let me delete this guy so you can see this very clearly. All right, so this is my 4-hour time frame. Let me just quickly show you this in an empty space. All right, so this is what I did, and I call it top-down analysis. I did something called counter trading. Okay, counter trading. So look at this. I saw this price. If you observed, I told you that GBP USD has been moving in a range for a while, since from the beginning of August. This is August, the beginning of August, and till this day. Look at this. It has been a ranging market. Market has been ranging all through the month of August. This is what you are seeing the market doing. And then we had this break out of this range towards the end of August, which is an indication that the market is about to gain momentum. The market is about to gain momentum massively. So I decided to look at this from the 4-hour time frame and then drop down to the lower time frame and take advantage of that. So when I drop down to the lower time frame, which is basically around this area, let me show you that particular area. This particular area, a break of structure right here. All right. Market has broken this structure, and I saw this imbalance, which is a very perfect one. This particular imbalance, this one, sell side imbalance, buy side inefficiency. All right, a fair value gap on this particular downtrend. All right, so I decided to take my fib levels like this and measure from here to here, and I watched out for this particular fair value gap. It's the most interesting thing I want to do. So if price is going to retrace, it's basically going to retrace into that particular fair value gap. That's what I expected price to do, because that is the point of interest of trade. So I decided to do something called counter trading. I dropped down to the 15-minute time frame. That is the part of the trading that you want to know about. All right. So look at this. I shared so many of these, concept on my YouTube channel. The best thing for you to do is to head over to my YouTube channel and come to the playlist. Find the playlist called ICT Killzones. On that particular playlist, you're going to see a lot of videos I've shared about Killzones. You can see it, ICT Killzone, a very powerful concept I've shared right there. All right. So coming back here, this is what I've seen. Oh, let me see if I can delete everything and have this as a clear chart so you can see what exactly I'm doing. Okay, so this is it, guys. Whatever happens now, I've already taken partials in this, and I'm sure this trade is going to go back up to that level. All right, I'm watching it though. So look at this. I was watching out for the Asian range. This is the Asian range. Okay, this is the Asian range. If you watch out for the ICT Killzones I've taught in my YouTube channel, you will understand a particular strategy I've actually extracted from this. So I wanted to see, since I wanted to do counter trading, that means I want to go bullish, because price is trying to go back to that level. You remember from the 4-hour time frame, the break of structure, price is coming back to the fair value gap. So this coming back is what I wanted to trade. I wasn't just taking the trade blindly. I know exactly what I'm doing. So if price is going to go back to the fair value gap, that's a good thing for me. So I want to take the trade from here to the fair value gap. All right, so I saw this thing happened this morning, right? I saw a sudden grab of liquidity below the Asian low. All right, the range here, the Asian low right here. I saw this grab of liquidity, And then I watched out for this price around 2 a.m. New York time. That's around 7 a.m. London time. 2 a.m. New York time, 7 a.m. London time. I saw this, and then I saw a fair value gap formed right here. All right, around this, please. All right. And I was so happy when I saw this. I wanted to take the trade as soon as I see price come back to that particular place. Let's see it. Now, I wasn't just taking this trade blindly, guys. You make sure you do your top-down analysis. You do your analysis properly so you can see what is happening. Okay, this is the fair value gap right here. All right. So I was watching out for that to happen. I saw that fair value gap in this manner. All right. So I call out this trade before taking it right here in the Telegram group. This is it. Okay. I've already entered the trade. Then I shared it in the group. I saw liquidity. This is liquidity, guys. This is liquidity has been taken down here, and price has shifted structure. Price have shifted structure and then created this. You can see this fair value gap. So that fair value gap got me more interested in taking the trade. I decided to take the trade right at the tip of that particular fair value gap, and I was waiting for price to come back and get me in. My target was up above a particular level. Which level was that? Somewhere around there. It was around 100 pips or thereabout. All right. So look at this. So I watched out for that trade to happen. Look at this. I was in the trade. I was watching it. I even left for something. So when I saw price reach this area, you can see this sell side liquidity. I thought, okay, let me just take partial. I reduced my risks. And then I took partial right there. And this is what is happening right now. Price is obviously trying to come back to this institutional reference point down at that level. And I'm still watching it. You can see that price has actually reached that area. All right. So this is it. Price is right at this point right now. Okay, it reached this fair value gap, and you can actually see it bouncing back. So obviously price may ultimately go to my TP. All right. So far the trade has given me almost 40 something pips. You can see almost 42 or 43 pips. So I'm watching this to finish, and that is basically what I did, looking out for a sweep of liquidity below Asian range since I'm going bullish against the bigger trend. And then I waited for a shifting market structure, which I've seen right here. If you drop down to the 5-minute time frame or 1-minute time frame, you will see it better. I saw it here, and this fair value gap was what attracted me, and I entered the trade from here, and it moved up from here to that place. So I call it a top-down analysis plus ICT London Killzone analysis. All right, just a brief one. I hope this video helps you. If you have any question, let me know in the comments. See you in another video.